Today, I want to talk about how the SEC has just issued a cease and desist letter to a number of short sellers, market makers, and banks. And I also want to talk about the hedge fund titan that says a black swan event is just around the corner. So stay tuned and let's make some money. And now I'll dive straight in with the key information. So, Edward Burchuk tweeted saying the SEC has just charged 11 Wall Street firms with widespread record-keeping failures. And he said, and one of the firms is Wedbush Securities, who have been deeply tied with Wells Fargo, Citadel, Virtue, and Wolverine Securities. Wedbush has also been involved in many short and distort attacks on AMC by the person known as Alicia Reese. So first, let's talk about who's been charged by the SEC, and then how that links back to Citadel, Virtue, Wells Fargo, and Wolverine Securities. So the SEC today announced charges against 10 firms in their capacity as broker-dealers and one dually as a registered broker-dealer and investment advisor for widespread and long-standing failures by the firms and their employees to maintain and preserve electronic communications. And they acknowledge that their conduct violated record-keeping requirements and agreed to pay combined penalties of $289 million. These firms are Wells Fargo and a bunch of Wells Fargo entities also related, BNP Paribas and SG America Securities, BMO Capital Markets and Mizuho, Houlihan Lokey, Moelis & Company, Wedbush Securities and SMBC Nikko Securities America. So it says compliance with the books and records requirement of the federal securities laws is essential to investor protection and to well-functioning markets. And Gurbeer Garul, the director of the SEC's Division of Enforcement, says his 3 takeaways for those firms who haven't yet done so: self-report, cooperate, and remediate. So it seems clearly the SEC is having big problems with funds not self-reporting, not cooperating, and not remediating. And is obviously encouraging or urging other funds to actually self-report and cooperate or face investigation and further fines. Now, I guess while that isn't too much of a threat from the SEC, it does indeed prove one thing that we know, and that is that these funds do not appropriately self-report data. And on top of that, it also seems that Wedbush Securities also received a cease and desist letter from the SEC to cease and desist from any future illegal violations. Obviously, the actual issuance of cease and desist letters, I suppose, does mean the SEC does mean business, and obviously wants these funds to stop committing illegal crimes. I do think they need to threaten with something more than just a small fine, but I do think a cease and desist letter is a good start. Now, Edward Burchuk has also added this screenshot showing that Wedbush Securities actually pays payment for order flow payments to Citadel Securities and to Wolverine Execution Services as well. Clearly, Wedbush Securities work hand in hand with Citadel, and that's why we've seen tons of analyst targets from Wedbush Securities over the last couple of years on AMC at only a few cents per share. If Wedbush aren't shorting AMC directly, I'm sure they're certainly shorting AMC indirectly through other market makers like Citadel. As a result, it seems the shorts are now trying to hide their short positions to try and avoid SEC investigation. Dade Murphy tweeted saying, "When did the shorts cover?" Intel is showing that APE short interest went from 13.9% 2 days ago to now just 5%. And the AMC short interest 2 days ago was over 29%, but now is showing just 10.6%. And he said again, I'll ask, when did the shorts actually cover these short positions? Also, you can currently get a guaranteed free share of Tesla, a $50 cash reward, and up to 15 free shares, which you could always use to buy more shares of AMC, GameStop, or a vape. All you have to do is sign up to Moomoo using the link in the description below and make a required qualifying deposit. Signing up to Moomoo is free, it just requires that temporary deposit, and it's a really great way to help support the channel and to help support me as well. And on top of that, Moomoo is very easy to use. They've got tons of technical indicators, advanced charting tools, and they even have their own options trading platform. Now obviously we know the answer is that the shorts did not cover, because otherwise the AMC price would have gone upwards. That is again, as I've said, just further reasoning that these shorts and these funds do not accurately self-report. Instead, they report incorrect data or just don't report data whatsoever, but just simply don't get caught for it because FINRA doesn't have the time to review all data submissions. They trust these hedge funds to self-report and also to self-report any errors that they've made. Obviously, if no reports are made and no self-reported errors are made either, FINRA still doesn't investigate. And this is obviously the major problem in the market, when these regulatory organisations like FINRA and the SEC don't review what their funds are actually doing because they don't have the time or the manpower. They just allow these funds to self-report and fully trust them to self-report, which obviously they just do not do appropriately. And it seems why the hedge funds are running scared and trying to hide their short positions, if it isn't due to SEC investigation, is due to this tweet from Mr. David Neo. He tweeted saying, "In OTC we trust. As per the ruling in the markets, there is no ceiling to how high a price can go." He also attached this screenshot of Sky Constant Century Incorporated trading on the OTC markets. This stock over the last few days ran from $10 per share up to $30,000 per share, a 299,900% gain. Now, I think this screenshot was provided yesterday, as you can see the current daily gain in green, obviously suggesting that this gain was today. If you go to the Yahoo website, it does indeed show the price did hit $30,000 per share yesterday, but has since fallen back to $1.80 per share. I personally don't have a clue what's going on with Sky Constant Century Incorporated, but obviously yesterday it had a massive run from $10 per share to $30,000 per share. And this also goes to show that it is absolutely possible for other stocks like AMC, GameStop and others to also run to $30,000 per share. And it could even potentially run that high in one singular day, going from $10 to $30,000 per share in just one trading day. Now finally, Robert has also tweeted about the hedge fund titan who's been watching for a black swan event for decades. And this titan says the greatest credit bubble in human history is set to pop. This article says when you write about the stock market and the economy, you get a lot of hate mail. It's just part of the job. Tempers tend to fray when money is on the line, and big names express their, at times controversial, opinions. But over the past year, even with inflation fading and stocks rebounding, I've received a different type of correspondence from Fortune readers. Simply put, they're worried. What's interesting is that this hedge fund titan during the pandemic posted a 4,144% return. And he clarified saying the 4,000% return was derived not from the fund's entire portfolio, but from its hedges. So this guy made some individual investments during the pandemic, which individually led to him gaining a 4,000% return. And he's also said the stock market could lose 40% of its value in a soon coming crash. And he said right now we're in the greatest credit bubble in human history. And that's not my opinion, that's just factual numbers. And he said we've never seen anything like this level of total debt and leverage in the system. It's just an experiment, he said. But we know the credit bubbles have to pop. We don't know when, but we know they do have to. So I think that my tinderbox metaphor holds. He's basically saying the stock market is about to implode due to record levels of debt and leverage in the system. And when this implosion happens, it will be a black swan event and it will catch stock market investors off guard. Basically saying the crash will happen at any point and at some point when most people are not expecting it. And this crash will lead to a potential 40% downturn. Clearly this hedge fund titan is also worried about a credit event and believes that it could happen at any point, just around the corner. And this credit event is likely to lead to the stock market crashing and therefore likely leading to many other stocks in the market squeezing as well. But guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell because that way you'll be alerted when I upload a new video. Cheers.